So, good afternoon, everyone, and thank you on the behalf of Kirin Advisors. I welcome you all to the conference call of Shree OSFM E-Mobility Limited. From management team, we have Mr. Nitin Bhagirat Sharma, Chairman and Whole-Time Director. And now I hand over call to Mr. Nitin. Over to you, sir.
Thank you, ma'am. Thank you. And welcome everybody on board to the first half of financial year 24-25. Thank you for taking time out on a Thursday afternoon to join us and honor and share the financial results and our growth journey post IPO. This is our second financial report that we are presenting to our investment community. And I'm sure it was uploaded yesterday, so most of you would have gone through it. But however, if you see, we have performed better over our last, if you compare our 23 first half and 24 first half. So we have performed better on all areas. Our top line has increased by about 23% over last year. Our EBITDA reached 9.81 crores, which is a growth of 24.31%. EBITDA margin expanded slightly to 13.33%. Net profit rose substantially by 115% to 4.78 crores. So net profit margin has improved by 2.296 basis points to 6.94. Our EPS also grew over by 55%, reaching to 3.29. This is what we've done in the first half of the financial year 24-25. As most of you know, and have been probably associated with us since the IPO journey, our approach towards the business is conservative, consistent profit, and because we are in the service industry, take on what is delivered, which ensures continuity for the next couple of years. Because we are in a pretty sensitive business in terms of service delivery, which is on a score of 1 to 10, 9 is the service delivery capability of a particular vendor for a client. Some of you who would have visited our website and you have seen that we have marquee clients like Accenture, Morgan Stanley, JP Morgan, Barclays, where their expectation of service delivery is very high. And we are lucky, and thanks to our team performance, our processes, our systems that are in place, we are consistently delivering. Each of the clients that I mentioned are more than 10 to 11 years in our client list. And with the post IPO, earlier we were doing few geographies for them, and we've got an okay from our clients to serve them across India, which is going to have a substantial benefit in the terms of all aspects of the financials, right from top line to better EBITDA to higher profit margins. This is as far as the present business that we were doing for the last 22 years. Now there is a new angle in our business, which is the electric vehicles. Now some people who came only with electric vehicles and had no service backgrounds failed miserably and are still not able to cope up. Our entry into the electric vehicle segment was very cautious, and it was a wait and watch, understanding the entire thing, understanding the challenge of a new engineering product, understanding how the automobile companies are going to support us in future in terms of service requirements and things like that. So over the last 1.5 years, we have got a fairly good understanding of what the challenges and what the opportunities of the EVs are going to be like. Now, if you see, some of you may ask that we have not deployed the funds that we've generated, have not been deployed to the full extent. This is exactly the reason, because we were on a wait and watch mode. Now we have a complete roadmap ready for the next 16 months, that is the next 6 months and the financial year 25-26. On a very conservative note, I can confidently say that if we maintain our DNA of conservatism and bring in little more dynamism, we are confident of overachieving what we had projected and what we look at delivering by 26. To put it simply, we have a 16-month roadmap effective from December onwards. 4 months of financial year 24-25 and 12 months of 25-26. In the meanwhile, with the aggressive roadmap that we are lucky enough to be able to attract talent into the organization. We have started working towards the goal. The roadmaps are ready, the processes are ready, the target clients are ready, and very soon my top team is going to start traveling across India to meet up and communicate with the clients about our readiness. So this is where we are, and this. Are there any questions? Do you want to ask any questions?
I request participants to raise their hands to ask the questions. And also please note the call will be only for 45 minutes. So I request to restrict your questions. Thank you. Yes, Mr. Agastya, you can go ahead and ask the question.
Good afternoon, Mr. Agastya.
Hello, sir. Am I audible?
Yeah, you are.
So we meet again. So congratulations, sir, on fairly decent set of numbers. I won't call them extraordinarily good because I saw there was some, at least from my understanding, there was some sort of a mild disappointment on the EBITDA side. I don't want to lose sight of the bigger and larger picture and of the long term. But quarterly numbers, I mean, if there is a trend in change, we get to know change in trend, then we get to know from the quarterly numbers. So I was just wondering, sir, if you would like to call out anything during the quarter which may have led to some pressure on EBITDA margins. And also, your opening commentary was very nice. It answered a lot of other questions. Yeah, best of luck, sir. But that was my only question.
So, Agastya sir, I would have my finance team answer that, right? I understand your concern is the EBITDA area.
So I have absolutely no concern, sir. This is just a question. I won't call it a concern.
Okay.
I was just wondering, sir, if there were any cost thing, any headwinds with respect to cost or any headwinds otherwise during the quarter, because a lot of the industries domestically are reporting disappointing numbers and they're calling out a slowdown. So I was just wondering if you saw any sign of a temporary or a temporary slowdown, because it looks from your opening commentary that there is absolutely no problem long term. But did you see anything extraordinary this quarter which you were not expecting?
No, this quarter, see, the kind of business that I'm in, I take it for granted that Agastya sir, you know our business, right? We are into the people mobility business. And if you see, there is a cyclical thing.
Yes, sir.
Right? So let me explain for you and for others. Is this that, see, I'm into the people mobility business for B2B, which means employee transportation.
Right.
Right? So if you break up the entire financial into two, like 6 monthly, typically in the Indian scenario, the holiday travel starts from April onwards and continues till about June, July, right?
Right.
Which means a lower attendance in the offices. A lower attendance in the offices translates into lower business for me.
Understood.
Okay.
Understood.
As the holiday season gets over, another challenge comes in, which by year on year is getting more and more complicated. That is the unpredictable rainy season throughout the 3-4 month period.
Understood, sir. Understood.
Now,
Makes sense.
how it impacts is that on a given non, for example, now let's talk
Hmm.
about today. Today, on an average, pan India, every vehicle of mine would do because conditions are normal, things are in place. There is nothing unprecedented happening everywhere, anywhere. So today, my vehicles would do an average vehicle would do 5 to 6 trips in a 12 to 14 hour mod, in a 12 to 14 hour of business hours.
Right.
The same thing in the rainy season can be 3, can be 4, can be 2, or can be none.
Understood.
Okay.
Right.
But at the end of the day, it all translates into what my revenues are going to be.
Right.
Now, the very fact that we have still maintained in that entire 6 months, we have still maintained, it shows our capability of anticipating. I keep telling my team, बारिश हर साल आएगी, छुट्टियां हर साल होगी,
जी.
राइट? ये हम इंडियंस है भाई, ओके? हमारे यहाँ पे तो जब से मैं पैदा हो गया ये 4 महीने में बारिश होती है.
Understood, sir.
So, we as an organization have you can say have created a shield. But yes, as you rightly said, okay, the per vehicle 6 trip versus a per vehicle average of 3.5 true 3.5 or 4 trips. That two का जो gap आ जाता है, average gap.
I understand, sir. That will lead to some sort of a pressure, artificial pressure on
Correct.
margins and
Correct.
revenue.
And what
Understood.
happens at that point of time, just to address that, if I increase my debt, अरे चलो on a situation where I need 100 vehicles, if I push 120 vehicles, I will have that pressure in the next 6 months.
I get your position perfectly, sir.
Yeah.
My second question was actually related to seasonality itself. So you kind of answered it just now. But if I look at then the H2, so H2 in terms of pure seasonality, should we expect like a similar ratio to last time? Because this is the first time I'm seeing the half yearly numbers.
It will
So
be
if I
better
look
than
at
that.
no, I understand YOY it will be much better. But if I look at the contribution of H2 of last year in last year's full financial year and the contribution that H2 will have for this year's full numbers, will the ratio be same?
No, the ratios will improve. The reason is that, see, yes, last year, technically, if you see 23, 24,
Right.
okay, everybody was getting back on its tracks. We moved from, say, 20% work from office to 50% work from office. Somewhere now it is stabilized to 65, 70%. And our clients are talking about 100% work from office.
Right.
Right? Which we already started translating. But we are not waiting for that. We are adding, electric vehicle was something which contributes higher top line as well as better margins, because clients understand that it's an expensive, it's not a low hanging fruit, it requires multiple things, investments and things like that. So
Right.
that's being compensated with higher rates. The per car realization of a EV across the board, right from the per vehicle unit economics to the entire thing that is associated with the unit economics, right up to the PAT level, is much, much higher.
Understood.
Yeah.
Understood,
So
sir.
our margins are, Agatha sir, I see my approach towards has been that pre-IPO, I had 3 concerns. I mean, I operated this business for 3 components of this business. One was my client, second was my employee, and third was us. Now, in the us category, that is from a private limited to a limited company, you are my family. My investors are my family. And I use the same DNA, the same thought process that what I did for us, I will do it for everybody to the best of my ability.
So we have full faith in you, sir. Thank you very much for answering the question, sir, and all the best, sir. I would once again request, sir, if possible, if we can move to quarterly reporting voluntarily, I would really appreciate it. Everyone would appreciate it, sir. 6 months is way too long a time, sir. I'm requesting
trust
this
me,
to each and
Agatha,
every SME company that I interact with. that please, sir, do it voluntarily. It is very, very important. It will be very much appreciated by everyone in the market.
Agastya sir, I look at it a little differently. Why? One is I look at it as my responsibility. I look at it as your right. And third, trust me, I look at it as a checks and balances. See, when I have people, my investors like you, who are going to ask me every month, it helps me to be on my toes every month. Our target and my team's target is to be communicating with our clients on a monthly basis. Why 6 months? Why quarter? Why not monthly? Right?
So I really appreciate it, sir. Thank you very much,
The
sir.
reason is that I am a running concern. I run 365 days, 30 days a month, right? So if I'm performing well or not performing well, why should I keep it under the carpet? If it is not, I will come back and say, sir, this was my headwinds, this is it. Please bear with me. This is the corrective steps that we are taking. You may come back and say, why don't you, maybe not on a public forum, you could come back offline and say, let's look at this. Let's look at this. I'm saying my commitment going forward is a monthly communication to my entire stakeholders.
Thank you very much, sir. I really appreciate it, sir. Thank you, sir. All the best. Thank you.
Thank you. Thank you.
And congratulations. Now I can like confidently say congratulations on good set of numbers. Thank you, sir.
Thank you.
Thank you, Agastya. Yes, Mr. Yash, you can go ahead and ask the question.
Hello, am I audible?
Yeah, you are
Yes.
audible, Ash.
Yes. Thank you for giving me opportunity. So I have few questions. Like we have short-term loans and advances of 10 to 11 crore. Can we know that what is the exactly to whom we have given that loans and advances?
Okay. Yes, sir. Those
Yes, sir.
loans and advances are a part and parcel of our business. These are loans and advances. See, when we operate, we are in an asset-light model. Okay, we support our vendor partners, that is our driver partners, with fuel, which is
Okay.
recovered at the end of the billing cycle. So that 10 to 11 crores is a constant working capital requirement.
Okay, sir. Okay.
Yeah.
And we also have like 52 crores of cash.
Yes.
What are we planning to do with? Do we have plans regarding that? How we
On,
will utilize them?
on a lighter note, we are planning to launch Kaun Banega Crorepati. No, honestly, Yash, we have, thing is like, as Agatha sir asked me earlier, and you are asking me. Yes, we understand the 52. See, with this kind of a cash, we don't have to look back with working capital requirement or capex generation every now and then. If you see, we accumulated this in a short span of from our IPO to the next fundraise that we happened. Because when you in a service industry, once you commit with the clients, you cannot turn.
Okay.
Okay.
Yes,
And
sir. Yes.
since post IPO, our clients, our investors expected robust growth from us on a year-on-year or a half-yearly mode. We wanted to be absolutely sure because honestly, when you run a company in a private limited and for 22 years, you understand the challenges of capital, raising the capital through normal means or through bank funding and things like that. And there are times in my 22 years, I've had times when I had to go back to the client. We have picked up big orders, big service level contracts. The client has not budged. They have said that our payment terms remains the same. But because of working capital crunch, we had to go back and slash the business. Earlier, we could afford to do that, but right now I'm a limited company. We have to think long term. And the clients have put that kind of trust in us. So our thing was, right now, let's accumulate it. And then we don't have to keep going back every now and then. Yeah. So this is completely, see, 30%, 35% will be utilized to grow our existing fuel-based cars, and about 65% will be used to develop the EV ecosystem, which will be cars, buses, charging stations, and the other paraphernalia. So you will see the disbursement, you will see the disbursement happening. And as I committed to the to my investors, on a month-on-month basis, we will give you an updates as to what our progress is.
Yes, very much informative. My next question is, what is our current fleet size and how much it will be at the end of year, financial year?
Current fleet size is, yeah, it's about 2,100. See, there are two ways to map this. We follow the methodology of, there is, in our industry, there is a process called inducted vehicles and on-ground vehicles. Inducted vehicles is a pool of vehicles. That pool, if you see, would be around 3,300 or 3,400. But we calculate it on the basis, because that is what matters. We calculate it on the basis of what every vehicle every day generates. So on that basis, my pool is on any given day, pan India, we have 21 to 2,200 vehicles operating, which generate business for us, which serves the clients. So that is the benchmark. If you take that benchmark, it is 2,100 vehicles. And we are just talking cumulatively, will be about 2,800 to 3,000 vehicles. In the first half, will be about 2,400 or 2,500. And by 25 will be much larger. You can add about 30% to that.
Okay. Thank you, sir. Thank you.
Thank you. Yes, Mr. Rahul, please go ahead and ask the question.
Hi, sir. Good afternoon.
Hi, good afternoon, Rahul.
Hope all is well, and thank you for doing this. Firstly, congratulations on your numbers. Amazing, amazing show. But I had a few, questions related to this. So, sir, the business is doing terrific, and we're generating a lot of cash. Have you guys come up with a dividend policy?
It is at the discussion level.
Okay.
Yeah.
And just to relate to this, a little further, this was a few months back, if you remember, a marquee investor in had participated, and where we raised money. What I failed to understand, so why did we raise money? Because our business is is generating sufficient cash. At the same time, what's happened, as an existing shareholder, I am concerned that we have diluted in the sense, uh, did we even require money when we're sitting with cash already post the IPO?
Rahul, I am with you on that on a 50% basis. Rahul, you have to understand where we all come from. We all come from operating a service level industry where the need of working capital is constant and large as you grow, versus a funding arrangement from traditional banks which did not understand a business. Okay.
Right.
So honestly, what has happened in the last 22 years is a deep relationship with our clients.
Right.
If my client doesn't hesitate to give me higher percentage of his business with the confidence that I'm able to deliver. Since you're a part of this conversation, Mr. Chandurkar asked me a question and I told him, right? Or I think Agastya, in that flow of conversation that I said, inherently we have this fear of going big, and, being left high and dry without funds. So that part of it, to address that part of it, we made these arrangements.
Right. No, but just having seen post the fundraise, obviously, our performance, where you guys have done an amazing job of the results which are already showing, and market is seeing that. What I'm getting at is, have you all also considered either giving a sort of either the money back to shareholders, or deploying it in a form of an acquisition?
Acquisition is a part of our strategy.
Okay.
We have already identified some decent size of companies, but then the negotiations are on. But I'm not banking on them, because we would be doing an acquisition only if the price is right. One, and not only price right, the partner whom we will work with in future should be having a similar long-term view that we have.
Right.
Okay.
So just one last suggestion is, since even you and the promoters are all are also shareholders, so to work on the dividend policy where even all of us can sort of benefit, and from not just the business performance, but also something to be taken into account, where probably 10% of the cash can be considered as a dividend. It's just a
Sure.
suggestion.
I'll factor that in, and I think we'll get back to you on that.
Sure. Thank you so much.
Sure. Rahul. Thank you.
Thank you, Rahul. Sir, we'll take the questions from Q&A session. Ms. Tara Kaur is asking, what were the primary drivers behind the 23.08% increase in revenue for H1 financial year 25 compared to H1 financial year 24?
Sorry, come again.
What were the primary drivers behind the 23.08% increase in revenue for H1 financial year 25 compared to H1 financial year 24?
Yeah, see, the thing was hard work, one, and second was the clarity of the roadmap we had already prepared. With a successful IPO happening, we knew that we were going to be cash is, working capital or capital is not going to be a challenge. So we went on to acquire more business, one. But as I said, we couldn't execute it to the level that we expected because of the seasonal nature of the business, which will get reflected in the second half. So this growth trajectory, if you see that it's a growth trajectory, yes, it is a muted growth trajectory, but it will be leaps and bounds in the sense like much better than what it was earlier. Growth drivers were this, a complete clarity. We know we are no longer in a tunnel vision. We are on the highway now.
Okay.
That's the that is reflected here.
Okay, sir. Yes, Mr. Siddharth, you can go ahead and ask the question.
Am I audible?
Yeah, you are audible,
Yes.
Siddharth sir.
Good afternoon, Nitin sir. How are you?
I'm good, sir. I'm good, Siddharth sir.
Okay. So, sir, you were mentioning a 16th month roadmap from December onwards. If you're comfortable, can we get a peek inside, like what the roadmap exactly is and what are we planning?
See, the planning, as I said, we are on the highway right now. I'm on a public platform, though we are a public limited company, and I'm sharing with my investors, and I'm factoring in that you're all my well wishers and my thing. As I said, let me put it across to you this way, Siddharth. Today, I have the necessary resources to be not to be conservative approach.
Okay.
But at the same time, my 22 years of profit-making DNA will only speed up. Let me give you an example. Earlier, I was probably driving at the speed of 45. I have an option of driving at the speed of 110, and accidents, the chances of accidents are much, much higher at that level. I would rather go at 65, 70. I hope I'm coming through, Siddharth.
Right.
Right? And I'm creating a team, I'm creating those shields that we can move from 45 to 75, which will get reflected.
Okay. I understand. Okay. And so we were planning on some geographical expansion as well. So,
We have. In fact, right now, after this, I mean, my travel is starting from tomorrow, and I'm going to be traveling across with my team, and we're going to have a focused approach. We had not looked at tier 2 and tier T cities as of now, because you can't consider Bangalore and Hyderabad as they are no longer tier 2. You can call them main cities. But our clients are getting into Jaipur was also, I mean, if you compare to NCR and all, Jaipur has also become almost like a mainline city today,
right.
tier 1 city. But our clients are going in Maharashtra geography, they're going to Nagpur, they're going to Nasik, they're going to Aurangabad. In MP, they are going to Indore. In Gujarat, they are going to Ahmedabad. They are going to Baroda. In Calcutta, they are seriously looking at, I mean, the West Bengal, they're seriously looking at getting into Siliguri. Bhubaneswar is
Okay.
coming up in a big way. So
I understand.
these are the geographies that we are setting up base, we are exploring, and talking to our clients about the potential of this, because our clients know what their roadmap is.
Okay. So, sir, if we expand our geographical location, so do we already have inducted few drivers there, or will we have to start inducting drivers there, or do we normally start with buying our own vehicles and deploying our own vehicles?
See, what happens is that, we have not started inducting the drivers, because for us, that is the easiest part of the whole game.
Okay.
That's the easiest part of the whole game. Luckily for us, the outsourcing ecosystem has been developed across India. And for example, if I have to start Bhubaneswar, my team says, sir, within 7 days, हम 100 गाड़ी तक खड़ा कर सकते हैं. But they've
That's
done their
great.
homework. Because there are not many opportunities. Today you have people in Calcutta who are actually from Bhubaneswar and would like to go back to Bhubaneswar.
Right.
Like in Pune, you have quite a few people who would want to go back to Nasik. But if we give them an opportunity in Nasik, they will go to Nasik.
And so I believe we were contemplating on whether to join hands with Ola and Uber for utilization of vehicles.
Not at
Have
the
we?
moment, yeah. Not
Not at the moment.
I want to create my own fleet of 10,000 vehicles, and then I would like to sit on the table with a sizable strength.
Okay.
I have the ability in the B2B space to go at least 6,500 on the next 2 years. I don't think so. We should look at, that's not a part of our strategy at the moment, Siddharth.
Okay, I understand. Thank you, sir. Really appreciate it. And
Sure.
best of luck.
Thank you.
Thank you.
You. Yes, Mr. Keshav, you can go ahead and ask the question.
Good afternoon, Keshav, sir.
Hi, sir. Happy afternoon, sir. So happy to see you here. So I had a question for you that we are right now having how many vehicles? I think we're having 4,000 vehicles on our books.
Yeah, no, 4,000 vehicles in the inducted. See, we don't have any vehicles, sir. We don't have vehicles on our books.
No. Obviously, I'm saying we have an asset light model, but we have inducted 4,000 driver vehicles. This is what I want to ask.
Like I was saying, Saman, see, there are two ways to look at it, right?
Huh.
What's the point in me talking about Anywhere between 3,500 to 3,600. But you know, our industry has absenteeism, vehicle breakdown, and things like that.
हाँ
What we prefer to calculate with at OSFM is
हाँ
how much revenue each vehicle is generating.
correct
Right?
got
That
it
makes
got
more
it
sense.
got it got it
What is the
got it
point in me going and telling the world कि मेरे पास 4,000 गाड़ी है, अरे कितना कमाया, कितना गाड़ी ने कितना कमाया, वो होना
I
चाहिए.
got it I got it
My
so
entire team
हाँ
focus is to get that guy on ground to do business.
got it sir
Right? So that is our approach. Yes. From that perspective,
so I
yes, Kesav sir.
yeah, so what I'm saying is, sir, our competitor, which has just got listed, the name of the company is Ecos Mobility. The market cap as on date is 2,130 crores. And they have a fleet of around 12,000 vehicles, means asset light model at the same time. And we broadly, Mota Moti, have a fleet of around 3,500 to 3,600 vehicles. And the market cap is only 244 crores. So we are quoting at broadly 12% or 13% of the market cap of Ecos Mobility. And we have broadly one third the vehicle size of Ecos Mobility with a lot of inorganic growth planned for the future. So I just feel that we are extremely undervalued. What is your comment on this, sir?
Sir, I fully agree. See, I was the first one, Keshav sir. I was the first one who jumped into the IPO market. You know, so the guy who comes to bat first, and if the bowler is, I mean, in my time, we used to have Andy Roberts and without a helmet. So we came to the market without a helmet. So investors like you have valued us. Now you have to value us.
No, I just feel that we are putting at 12% of the market cap of Ecos
No, no,
Mobility. And
see,
this
I'll
is
tell
just
you,
this is just very, very unfair looking at what we have and what is the growth going forward. Look at the growth of Ecos is not giving us growth. The numbers are not good at all. And our numbers are at least a 50% jump and with a lot more going forward. So I think we are just very, very undervalued looking at the growth potential of the industry and of our company specifically.
So Keshav sir, I'm the acha bacha in the class. You people have to give me the marks, no?
Yeah, I got it, sir. I got it, sir. I was just wondering
I'm
what's
the good
happening over
boy.
here. No, I understand, sir. I understand.
Yeah.
Thank you so much, sir. Thank you so much.
Thank you, Keshav sir.
Thank you. So we have next question from Babu George. Please explain growth drivers for revenues and net profits for H1 financial year 25. Are they sustainable going forward?
And they are not only sustainable, they are going to be substantial growth in all the parameters of the financials. As I said, we have put our business on a fast growth mode. Yes, we will have some headwinds. EVs are going to be the headwinds because that market or that ecosystem is still under development. It is not a full-fledged market. Okay. So the thing is so we will have those headwinds, but whether there are headwinds or otherwise, we will still have to forge ahead. And we'll have to do it in a slightly bigger way rather than we can't have a very conservative approach on the EVs. So I would request my shareholders to bear with us because as I said, we were the pioneers, though we are not the pioneers in the EV growth. But if we have to maintain, if that is going to be the future, we cannot be left behind being a marginal player. We have to be a decent sized player to be able to play in that market.
Okay. So next question is from Chaitali Dev. Recently, which cities we have our presence and what are our plans for regional expansion?
Sorry, I didn't get you.
Recently, which cities we have our presence and what are our plans for regional expansion?
Our focus is, if you see, we are traditionally a Bombay-based company. We were with a presence pan-India. Now, with the resources, with the teams that we have, our entire focus is across all major cities. If you see, we are already operating out of 8 locations: Mumbai, Delhi, Calcutta, Kolkata, Chennai, Pune, Bangalore, and Hyderabad. Now, our second line of this, there are two strategies. One is focus on the growth in these geographies, take them to the next level, and at the same time, open For example, now our focus is in the north. In the north, it is Jaipur. In Maharashtra, it is Nasik. In Gujarat, very soon we'll have Ahmedabad coming up. Down northeast, we will have Siliguri and Bhubaneswar. So these are our future expansion plans. We will have about 17. We'll be operating out of 17 cities, 17 or 18 cities in the next 16 to 18 months.
Okay. Next question is from Mr. Amit Chaudhary. What steps has the company taken to maintain fleet reliability and minimize downtime?
See, our strategy is to have a business partner whose vehicle is less than 3 years old, maximum up to 5 years old. Okay. Up to 3-year-old vehicles, we ensure that they get sufficient business in terms of kilometers. They would clock in 4,500 kilometers or more. Or we also operate on a 24 by in wherever it is possible. We squeeze the asset to 18 to 24 hours with double drivers and things like that. A less than 5-year-old vehicle, we know that there are engineering challenges, so we restrict the operation time of that vehicle to 10 to 12 hours and about 2,500 to 3,000 kilometers. That helps us. See, today technology, I mean, the most popular cars in our industry are Maruti Suzuki Swift Desire, Ertiga, and in the higher end category, it is the Innova Cristas. And all these vehicles over a long period of 15-20 years have proved their capability. They are almost like, maintenance free. I mean, you do a regular maintenance of these vehicles, the downtime is absolutely next to negligible. Of course, but maintenance has. So on maintenance levels, we have tied up across, we have our own business network, our own maintenance networks who are trustworthy, who are knowledgeable, and ensure that our vehicles downtime is the minimum.
Okay. Next question is, what are your competitive advantages that distinguish yourself with your competitors?
Well, I can say that my customer, we have been awarded, every company that we worked in have labeled us as the most significant value added partner for their service delivery. That is one. We've got multiple awards also from our clients, which we'll share shortly. Overall, from a competitor perspective, I think we are more focused. Like Keshav sir mentioned, about one more company. We are more focused on the B2B delivery and are looking at growing into other territories where our expertise lies.
Okay.
So
Next
that's
question.
Yeah.
Yes, sir. Please continue. Sorry.
The very fact that we have not lost any contract in the last 10 years, I think shows the trust that the clients have put in us. And you rightly said, what is it? See, our pan-India expansion has been on the request of our client. It's a give and take. When we said that we would like to come and serve you in different geographies, they did not even think twice about inviting us to start operations there. Because we already had a 10, 12, 14 years track record in Mumbai, serving in multiple locations. That is exactly the strategy that we are going to use to expand our business in other geographies.
Okay. Next question is from Mr. Rusham Ved. How many new clients have we added during financial year H1 25?
Our total pipeline was for about 9 clients. We've added 3 as of now. We've added 3 and the rest 6 are large transitions.
Okay.
Yeah. So I think by next week we should be closing 2. So we'll have 5, and the rest, that's where the mix of EV versus this That's a slightly tricky thing. But I think by the end of this year, we should be able to close 9. 9 new clients other than the 26 that we have.
Okay. Sir, we'll take one last question from Mr. Siddharth. Yes,
Hi,
Mr.
good afternoon. I
Hi,
apologize.
good afternoon, Siddharth.
I'm good, sir. How are you?
I'm good, sir.
Yeah, I apologize if my question is a bit repetitive as I joined the call a little later. I just wanted to know, earlier we were targeting for a growth of about 35-40% organically. And on top of that, we had sufficient cash balance and we were thinking of an acquisition, which would have brought in another 20%. So can we say, are we still on track on the organic growth? Because the numbers seem slightly muted on that
Yeah,
front.
the numbers, as I said, Siddharth, sir, definitely because of the seasonal nature of the business, right?
Okay.
See, my 21 years as a company, 15 to 17% has been a normal momentum,
Okay.
right? And if you see, uh, the addition of 13 to 14% to make it an aggregate 30% will definitely be reflected in my next half. As far
Okay.
as the inorganic growth is concerned, uh, you know how it goes. When you go out as a buyer,
Hmm.
it's become suddenly very expensive. And when you try and go as a seller, things become suddenly very cheap.
Yeah, yeah.
Yeah, so Siddharth, you
And
know, the best and the worst form of about a public of an open forum is everybody knows how much money we have.
yeah.
So everybody wants to have a bigger piece of that,
Hmm.
है ना? तो 10 रुपए की चीज 50 रुपए हो जाती है, तो क्या करूं मैं? तो
And so organically, is it safe to assume that the second half compared to last year will be at a roughly 30-35% growth trajectory
yeah,
if we compare H2 to H2?
absolutely.
Okay. And one last question. In terms of our fleet, what is mentioned in the PPT, we have a same fleet size as compared to the ending of last year, FY24. So, when you mention that the average money that one car makes, is that higher now compared to last year? And given fleet additions, what is our status on that?
Yeah,
Given we
as I said, you know, so that's my fleet car. See, there is an attrition. There is an attrition either from my driver partner or there is an attrition from our side, post attrition because of service level issues.
okay,
Right? I'm in a service business. My client wants me to serve him 30 days a month, 26 days a month. There are some driver partners who do not follow that. They are more, you know, they come only for 12, 15, 20 days. We give them a leeway of 1 or 2 months, and then, you know, when it becomes a little too much, we ask them to go. So technically, if you see, our thing is our top line will always reflect what every vehicle, because we don't give the attrition numbers, nor do we give the addition numbers. They will start doing that. That's a good suggestion, Siddharth. You know, I think I should be able to do that. Yes, that this quarter we not only did this business, we added this many business partners. That is one good way. Thank you. We'll do that.
because we'll get a better picture as to how many drivers are staying, first of all. And second of all, because we are onboarding vendors as such. So it should be easier for us to onboard higher vendors if we see growth in the
Not
pipeline.
only that, see, we had a little humanitarian angle also. Post COVID, I mean, during COVID, you know, this was the business partners were affected the most.
True.
So for a period of 1 year, we decided that whoever has managed to survive and hold on and has been with us through this difficult times, let's give them more business rather than adding more cars.
Okay.
The guy who was making 55, 60,000 a month, let's give an opportunity to make 70, 75,000 rather than adding a few more cars. Now that thing is done. They have reached their peak.
Okay.
Now for us, now, you know, now we need to add and we will add.
Yeah, understood. So we've sweat out as much as we could from our existing driver base. So new vendors should be onboarded and additional cars you will have on your
Absolutely. Yes.
10% of the fleet.
Yeah.
Understood, sir. Thank you so much. That'll be all from my side.
Yeah. Thank you, Siddharth.
Sir, I think we have covered majority of questions. Thank you everyone for your time, and thank you Nitin sir. Thank you team. If you have
Yeah.
any queries,
If
you
you
can
are,
write.
if anybody has, ma'am, you can organize that, a recorded thing, or if they want to have some direct interactions with us, you can share our email IDs and phone numbers and things like
Yes
that.
sir, yes sir.
Right?
Sure, I'll do it.
I have my entire top team here. I have my CFO, I have my finance team, my operations team along. So we'll be more than happy to share. Yeah.
Yes sir, sure. Okay.
Okay.
Thank